Hi there, it's Grant here and welcome back to the Fast Track Options Trading Challenge. And in today's video, I'm going to be talking about options trading strategies and strategies that you can use as a beginner. So what I'm going to be doing today, just to let you know, I'm just going to be basically talking and rambling, and this is my trading screen, and I use Tastyworks to trade options. I'm just going to try and give you the simplest sort of strategy or strategies that you can use so you can get started with options trading. Now, in the full act of honesty and transparency, I'm not an options trading expert. I only really got into options this year. I've been mainly sort of interested in crypto, but the crypto market is so volatile at the moment and the floor's dropped out of it. I've been basically looking for other ways to basically invest my money, and basically options trading is one of the best and smartest ways that you can do it. But I understand, as basically someone who's learning options myself, that when you first get into options, they can be incredibly confusing. What they're about and what they do, because with options you're not really buying the stock. You can do, but you're not really buying and selling stock. You're just basically controlling the stock with an options contract, and you're trading the contract. So you're buying the contract at one, or most traders anyway, buy the contract at one price and they sell it for higher. And until really that kind of penny drops, it can be really, really confusing. But options doesn't have to be confusing, because really, the way to win with options, especially as a beginner, is to have a clear strategy and to keep it as simple as possible. Having a complex strategy, especially when you're a beginner, is just really a fast track way to overwhelm yourself and completely confuse yourself and, basically lose your money. So the way I've learned options is basically to really hunt down the experts in the industry and really look for the simplest sort of strategy that you can use to get going. Because obviously, I think when you start out options trading, you need to use a simple strategy. And then as you get more advanced and you build up your portfolio, then you can start using more advanced strategies. And there's a ton of different option strategies out there that you can use. You can, use leaps, which is long options. You can use spreads, iron condors. The list goes on. But this video is not about complex strategies. I want to keep it simple. So what is the most simple, sort of way to start trading options? And in my opinion, from my research, it's to buy call options and to buy put options. And crucially, it's basically to really stick with one theme, one security, and one stock at a time. The thing is, if you're trading a ton of different stocks and you're trying to make money on all of them, that just adds more risk and a lot more complexity. The thing is, it's, what you want to do when you're trading options is to really hone in on one stock and trade that stock with options contracts, with calls and puts, and trade the moves of that stock. So let me talk about this in a little more detail. So basically, when you're starting out with options, what you want to do is pick a stock that is basically highly volatile. At the end of the day, if a stock you're trading is pretty much flat, or it's been flat for a while, you can make money with that using options, but it's going to be tough. So what you want to do is look for volatile market, look for a volatile stock where there's been quite a lot of price movement in the stock price over the over the past 6 to 12 months. That's a good sign. You want a stock with volatile movements. But also you can take that a step further and you can trade events. And probably one of the most, best events you can trade options on is when earning reports are coming out for a company and a stock. And what a lot of options traders do is when companies, going to be giving, their their sort of financials for the previous quarter. What an options trader will do, they'll sort of get an idea of whether that news will be positive or negative. Obviously, if it's going to be positive, they're going to be betting that the price of the option is going to be going up, and then obviously if it's negative, they've lost money. The stock price is going to be down. So based on whether an options trader thinks if a market's going to be going up or down, they're going to be buying a call option based on that, the financial report. So obviously if a market's going to be, if they think, the company's going to be producing strong profits, then the stock's going to be going up. So what they'll do is they'll enter the position with a call options contract. So they're going to be buying a call for that stock a couple of weeks before the news comes out of the financials. And then obviously as it gets closer and, if news starts circulating that obviously the financials are going to be positive and the stock starts to rise, the value of your options contract is going to increase, because just to reiterate, you're going to be paying to open or buy a call option on a stock. So as obviously, you're going to be entering that option with a strike price. The strike price is the set price of a stock in that contract, and then obviously you're going to be sort of buying that option and setting a strike price that is very close to where the stock price is at the moment, probably a bit higher. And then obviously as the positive news comes out, once the stock price exceeds or goes higher than the stock price in your options contract, which is called the strike price, your options contract is going to be in the money, and the higher it goes, the more valuable, as a general rule of thumb, your options contract is going to be. And then basically what you can do is you can sell that options contract for a higher premium than what you paid for it. So basically with this strategy, you're using call options to trade the movement upwards in the stock price, and cash out as the stock market rises. Conversely, you can also trade in the other direction. If you expect a company is going to trade lower, they're going to be issuing negative financials, you can make a hunch that obviously the stock price is going to fall. So again, you just do the opposite. You buy a put option, and you use a put option to bet if the stock price is going to fall. So obviously, if the stock price falls below the strike price in your put option, so you're going to be buying a put on the stock. If the stock price drops below the strike price, which is the set price of a stock in the options contract you're buying, you're going to be in the money, which is going to make your options contract more valuable, so you can sell it for a higher premium for what you pay for it. So that is just one example of how you can sort of trade, news events and trade financials. But obviously there's other events you can trade and buy call and options on, depending on where you expect the price, the market to move. For example, if you're honing in on a stock and you think interest rates are going to rise, higher interest rates are going to generally, sort of make stocks fall. So, if that news is coming out, the interest rates are going to come, and you've got your eye on the stock, just one stock, you could take a, put option open on that stock, maybe a week, 2 weeks before, when the news comes. Obviously as the, the stock, as the news comes out, the interest rates are going to fall, the stock's going to plummet or fall. And then obviously if it falls below the strike price in your options contract, you're in the money, options price goes up, and you just got to decide when you want to cash out and collect a higher premium than what you pay for it. So I'm hoping this makes sense. Basically, when you're starting out options trading, it's first of all important to hone in on one idea, one security, and one stock. And then basically hone in, and then basically trade that stock with the price rises and falls. That's basically what it's about. That is really the best way to go, buying calls and puts on one stock and trading the rises and falls of the stock price, depending on when you think the stock price is going to move. So that is basically the best way to get going with options trading. Buy calls, buy puts, hone in on one stock, one security, and trade news events, and trade obviously when the financials come out. Obviously, knowing when to get in and out of an options trade is another skill altogether. But obviously this is a skill you're going to have to learn over time. It's not going to come overnight. There's going to be trial and error in this, and some you're going to win and some you're going to lose. But this is the best way, I think, to get going if you're new to options. Now, obviously deciding on which stocks to pick that you can trade is another skill. If you've got no idea what stocks you want to pick, you've only really got two ways to do it. You either go deep into your own research and look at which stocks you want to trade, and then try and decide when to enter a position with a call or put option and when you need to exit, or basically you can follow an expert. My advice is I would follow an expert, and I've learned options trading through someone called Larry Benedicts. He's one of the top options trading experts in the world, and he's got a strategy he calls the one ticker retirement plan, where he just basically trades one stock at a time with options, either trading call or buying calls or buying puts on stocks, depending on which way the stock is going to move. So if you want to check that out, highly recommend it. Very simple strategy, but highly effective if you're new and you want to get going. What I'll do is I'll leave a link to Larry Benedicts One Ticker Trader below, so you can check it out. It's only $19 to join. That will lock you in for the year, and you get a 60-day money back guarantee. Highly recommended. It's helped me, and I think it'll help you as well. So anyway, I hope you found this video useful and informative, and I hope you got value for it. If you do, why not like, why not subscribe? And I'll see you in the next video in the series.